Hello, everybody. Welcome back to episode 4 of Chipchat here with Jose. Jose, I have a question for you.
Yes, go ahead.
So when you take your wife on dates, do you just sit down and are you just like, babe, generative AI and accelerated computing is going to make us fucking filthy rich? Do you just say that sometimes? Do you just, because I've heard Jensen Huang hit like 50,000 times this weekend. Do you ever just say, babe, generative AI and accelerated computing, that's all we need in this world. That's all we need.
No, I usually just say Nvidia and that's it.
So
And
your
she
wife
gets
knows what Nvidia is at this point.
yeah, definitely for sure. But at this point, she knows. It was so funny. My brother-in-law called me and was like, "Hey, I'm so happy to know someone who was in Nvidia for before it was cool." I'm like, "I know."
Do you talk about it ever with her, or do you get so tired of talking about it on YouTube that your wife is like a safe spot to get away from semiconductors?
Yeah, I mean, usually with my wife, I don't talk too much stocks. I mean, obviously we talk financials because it's an important part of our relationship. But in forms of stocks, nothing. I don't go crazy with her at all. I don't bore her to death. If anything, she might watch my YouTube videos to give me some few view counts here and there.
Oh boy. So obviously we had Nvidia earnings. It was one hell of an earnings. It was incredibly exciting. The entire market was very scared about what was going to happen for Nvidia earnings, which is why the market kind of tanked a good 3-4% right before the earnings happened. Nvidia went down to about 674 a share, primarily because the market was resting on this one company performing. And the company ended up performing. Here's some top line stats, and then we're going to go section by section breaking down Nvidia. Record quarterly revenue of $22 billion, up 22% quarter over quarter, 265% year over year. Data center revenue $18.4 billion, up 27% quarter over quarter, 409% year over year. And then full revenue $60.9 billion, up 126%. One of the things that shocked me the most was this right here. Revenue, gross margin, operating income, net income, and diluted earnings per share all went up. I mean, net income is up 581% year over year. They did 4.3 billion last year, 29.7 billion this year. And they only increased operating expenses by 2%. So this is a company that has stabilized their cost structure to such an extent that they can increase every top line metric by like triple digits and barely increase their expenses.
Yeah.
Jose, you've been in the stock since 2018. Your portfolio is looking well. What were your raw thoughts on this earnings?
Overall, pretty excited. I mean, we heard a lot of great things during the earnings call. I mean, we saw triple-digit growth in revenue, triple-digit growth in earnings all around. And one thing I do want to say, when we're looking at those numbers, there, gross margins went up a nice amount. It went from like 56 to like 77 versus a year ago. And sometimes someone who might be new to Nvidia, for example, might see that and say, wow, that's crazy, right? Where this might be a huge bearish case in the future. What if we start to see gross margins compress later on, as maybe Nvidia doesn't have the high pricing power? I do want to just remind investors that about a year ago, we were still in a huge inventory correction. So because of that huge inventory correction, gross margins actually took a nice dip. They were in the mid 50s during this kind of over inventory correction. But normally Nvidia has gross margins of roughly like 66, 67, and they continue to grow as kind of the company was moving more into the software business to some extent. So I know sometimes we hear a lot of bearish cases of, look, gross margins was up almost 20 points. What happens when pricing power starts to decrease? And I just want to say, hey, look, that was, if you look at it versus a year ago, it was a completely different time of over inventory correction, and you were seeing kind of a dwindle in margin. So I sometimes will look a little bit further out in the picture when looking at things like gross margins.
Right. And we'll talk a lot about some of the supply issues people are talking about for why maybe demand is struggling a little bit. But in terms of top line growth, the market, Nvidia went up 20% after these earnings. They were down almost 10% in the past 5 days before these earnings. And then the whole market went up. Did you think these earnings were good enough for a $300 billion increase in market cap?
I mean, I think they were really good. Because it did ease up a lot of questions that we might have had. And we're going to talk about some of them in a bit. We'll go a little bit more in details in them. But the three main questions that I was asking myself as an investor while listening to them was, one, are supply chain issues increase? Is supply chain easing up? The answer was yes. They're easing up, and we're going to see huge. We're going to continue to see that, and that was one of the main reasons we saw revenue beat and we saw guidance beats because of pretty much supply chain issues are getting better. The second question I had was, where are we going from China? Is China still going to be a major tailwind? Is it going to be a headwind in the future? Is it still going to be a major headwind, or could it be a tailwind in the future? And I do believe it's going to be the latter. I think right now, it maybe a quarter ago, maybe this quarter was a headwind, but in the upcoming quarters, I do believe it's going to be a tailwind for the company. We can explain that a little bit later. And the final thing I wanted to look at is, in the previous earnings call, Jensen was very excited and kind of gave us a green light that growth was going to continue in 2024 and 2025. And I
Yeah.
wanted to see if that was going to change. And there was a lot of great questions during the earnings call. And there was a question pretty much, hey, are we going to continue to grow in calendar year 2024 and calendar year of 2025? And Jensen pretty much said that things are looking good right now for that to continue. So overall, those three green lights tell me that we should continue to expect some nice revenue numbers in the data center, at least for this calendar year and next calendar year.
Yeah, they guided, or it looks like they're guiding 90% year-over-year growth, $2 billion more in the next quarter than analysts expected, and they beat by $2 billion this quarter. It was one of those things where I think everyone knew the numbers were going to crush, but what people were concerned about was, are the numbers going to crush to the point that could justify a 62% run-up in the past 7 weeks? And I think what I'm getting from your perspective is that Jensen on the call, and I listened to the call, you listened to the call, basically said to every analyst that kept asking, what do you think about demand going forward, is that this isn't stopping. Media and entertainment, hospitals, sovereign nations, like everything in the world it's like he's laying out his thesis again, a thesis you would lay out in like a VC pitch deck, but he's doing it to analysts because he's just like, look, I know you guys think that the numbers aren't real, but this is happening and the numbers are real. And now you have to value the business effectively because the numbers are happening.
Yeah, definitely, for sure. I mean, numbers were crazy, and he talked a lot about different industries, the automotive market. He mentioned some pretty cool. Again, we can talk about that later on. But the automotive market, even though in forms of revenue, when you look at it in the subsection, is such a small portion. He does mention that automotive, in forms of data center, was a big portion of this company's total revenue. So as we continue to grow from, I guess, players like Tesla and anybody else that's working on some form of autonomous driving, at the end of the day, they're using infrastructure from Nvidia, either being their own personal data center or renting out infrastructure from the cloud server providers.
Right. Okay, so let's we got a bunch of different segments inside of this. I mean, let's start off with automotive, then we can get to gaming. So what I'm looking at for automotive is fourth quarter revenue was $281 million, up 8% from the previous quarter, down 4% for the year. Full year revenue rose 21% to $1.1 billion. What exactly is automotive revenue? Is that like the stuff Tesla buys from Nvidia? And then why do you think it was down year over year?
So Tesla at the moment only buys H100, pretty much just H100 chips from Nvidia, or kind of these AI chips for their data centers. But Nvidia, for those not familiar, they do create chips that go into the cars themselves. So Tesla used to be a customer of them. Tesla used to be a customer of Nvidia's chip, where now they use their own inferencing chip. I believe it's called the FSD chip that now goes on the Tesla versions. But prior to that, Tesla used to use Nvidia's chips. There are plenty and plenty of other car companies out there that unfortunately probably don't have the engineering talent as Tesla, that
Right.
they can't create their own chips. So they use these unique chips that they're called. Let me see if I can pull them up in a bit. But Nvidia's. But pretty much they're just these unique chips that go into the cars. And right now, the car market, as we all know, especially if you follow companies like Tesla, is definitely taking a hit. A lot of these cars that are using these chips probably won't come out till 2024, 2025. So we won't really see a nice portion of this revenue coming out till maybe next year or so.
Okay, so it's not a big concern that automotive revenue is down, in your opinion, for Tesla. Or sorry, not for Tesla, for Nvidia.
Yeah, definitely not. It's always been a small portion, and right now it does seem like we're still seeing a lot of pressure in the China market, in the automotive, which is a big player. This has always been a small portion, but I do believe in the upcoming years, these chips are going to become a good portion of this company's total revenue. Maybe not a data center, but it definitely will be a nice tailwind in the future.
Okay, so then let's talk about data center revenues now. So data center revenue, 18.4 billion. which is just insane. That's up 27% quarter over quarter. I mean, companies can barely grow 27% year over year. They're growing 27% quarter over quarter. It's insane. 409%, 47.5 billion, 207% year over year on that full year revenue when it comes to data center revenue. And then they added a bunch of different things that they did with new optimizations and partnerships. So for those that don't know, and by that I mean me, what does data center revenue actually mean? Like I kind of know what it means, but what does it really mean? And then do you think this is slowing down, or is this just going to keep going as well?
So data center are pretty much the AI chips that Nvidia sells. This is like the H100. But Nvidia luckily has more than just AI chips. They about 2 years ago, when you're creating a computer, right? These supercomputers, you need a lot of components. You need networking components. You need special networking cards. You need CPUs. You need a whole list of things. So the main core product that Nvidia has is GPUs, but they also do have networking solutions. They do have kind of their own infrastructure to a way. So NVIDIA sells more than a card. They sell like a complete package to these data centers. So at the end of the day, they're selling pretty much supercomputers to these data centers where they can kind of build up and create their own AI infrastructure, more or less.
So it's literally chips. That's what data center revenue is. It's
Yes.
H100.
Yeah, I think you might include some form of software revenue, but we saw their software revenue is still pretty small. I do believe it just hit a $1 billion annual run rate, annualized run rate. So you could include some software, but a big portion of this company's total revenue comes from the GPUs themselves, the H100 and the upcoming H200, the L40. There's different variants of their AI chips, but the biggest and the most common is the H100.
Okay, cool. So numbers on the top line were great. Numbers in individual segments were pretty fine. I mean, it's a little slow down in automotive, but outside of that, the fact that their software business, you just said, is a $1 billion run rate inside of this company is just incredible. They did do $9.7 billion of buyback. They're now growing double their PE. And I think that buyback kind of helped them maintain the EPS. It didn't have the biggest impact, but they made sure to do well on that. Here's one bear case that some people thought about when it came to Nvidia. This has been going around on Twitter. So they said this here in their 10K. Entering our fiscal year 2025, we are gathering customer demand indications across several product transitions. These increased purchase volumes, the number of suppliers, and the integration of new vendors into our supply chain may create more complexity and execution risk. We may incur inventory provisions or impairments if our inventory or supply or capacity commitments exceed demand for our products or demand declines. Now, you put this together with the argument that the bears have been making, which is that semiconductors in general are a cyclical business, and a lot of Nvidia's growth has been demand that has been pulled forward. And then Jensen Huang's like, no, the demand's really not stopping. It's the whole world is changing. This is bigger than the internet. How do you reconcile those? Is there an argument for that they may have too much inventory and then this kind of falls off a cliff once the street realizes that they don't have enough demand? Or is Jensen right and they don't have enough supply to even service that demand?
So I mean, this is always the case of in the semiconductor market where it seems like there's just too much demand. And unfortunately, something happens. Either macroeconomics pressure affects a lot of these big tech companies. And sure, maybe a quarter ago, they needed all these data centers to be built up. But because of macroeconomic pressures, the next quarters they might slow down on building some of these data centers, or there might just be some issue with the construction of that data centers. There's so many uncertainties that some companies, if you're building huge data centers and you see some delay, you're going to go back to Nvidia and you're going to say, hey, look, maybe I don't need all these GPUs this quarter. But most of the times when we see this kind of over inventory correction or pressure, it's very short-term lived here in the semiconductor market. I mean, for long-term investors, it can last two quarters, it can last a year. And I do believe that's probably my biggest risk case for Nvidia is the issue of over inventory correction happening in the future. But to me, that's more short-term pain. That's something that would again give me. If we see that, I would be very glad because that's going to give me a buying opportunity to even double down. If I was to see, hey, look, over inventory pressure, people are slowing down on GPU orders. I'm going to say, hey, look, I've seen this before. This is just going to last maybe 2 quarters, maybe 3 quarters, maybe a year. But the buying opportunity is going to come here. And I actually have some slides. Let me kind of share
Yeah.
share
Pull them
because
up.
during the presentation, one of this or the earnings call, one of these questions was asked about over inventory, and Jensen, somebody was wondering, hey, how are you keeping track of your customers, that you make sure you're not giving too much inventory to one customer. And Jensen mentioned the following. First, he mentions that he is very transparent with their roadmaps to the big cloud service providers. So Google, Amazon, Microsoft, they already know what the product map of NVIDIA is before maybe some of us know it, before investors know it. They already know how much they can produce, when can they give them all these products. So because of this transparency, they're able to kind of, hey, look, Microsoft might not need these chips this quarter, so we'll send them over to Meta instead, or we'll send it over to this other
Ah.
player instead. The other thing that they do is it's very unlike most companies. Most companies just kind of talk to either the middleman or the end customer. And sometimes there's a miscommunication with one. So if you're talking to the middleman might be saying, hey, look, we need a lot more chips. But at the end of the day, they're not telling you that the end customer is kind of seeing some over inventory pressure. NVIDIA pretty much mentions that, hey, look, we talk to our OEMs, we talk to our cloud server providers. So pretty much they're saying we talk to both the middleman, the middleman, the middleman, and the end customer. So we know throughout the whole supply chain what is happening. So that can obviously help them say if there's some inventory glut happening somewhere, we're going to be able to, again, maybe we don't focus on this customer this quarter, we'll focus on this customer instead. So I do believe NVIDIA is kind of keeping on top of it, but at the end of the day, there's so much that can happen in the semiconductor market that you always see some hiccups. And if that hiccups comes, I do believe that'll be a buying opportunity in general.
So basically, the question here was like, how do you know and keep track of everything that's going on in regards to inventory commitments and overall demand? Your argument here is that NVIDIA's basically kind of having an understanding that maybe Microsoft doesn't need this much this quarter, but XY Meta needs this much this quarter. And so we're kind of swinging and and managing it in a way that allows us to make sure we have enough inventory. But if certain clients don't need as much right now, there is so much demand, which was Jensen's point, that we'll just offload it to other clients. And that's why it evens out at the end of the day, which is why this is not the biggest concern in the world for demand.
Yeah, and I mean, eventually, I do believe that's going to be the case. But right now, if we see capital expenditure continue to grow from all these big techs, and that's why, even though maybe I might not be invested in all the big techs, I'm always listening to their calls to see where is capex going, what are we looking at lead times, what are they talking about AI demand. So if you're a big fan of Nvidia and you have a big investment, I do believe it's great to also look at the big tech to see where they're spending.
Okay, cool. I want to get your reaction to this clip right here on NVIDIA. This was right after the earnings, and someone said something that was interesting. He made an argument that made people get a little upset, which was a guy from Lux Capital. I don't know if you've seen this clip, who is a VC, who basically said you're 5 years too late on NVIDIA if you are just coming to the party. So it's a bit more of a bearish case on what's going on with the video. Let's react to it, and then we'll get your opinion and whatever the chat thinks as well. And guys, if you have any questions, we'll do Q&A the last 15 minutes. So any questions at all about NVIDIA earnings or semiconductors, put in the chat, and we'll get to them. Here we go.
The green beating on both lines, beating on data center revenue. For more on NVIDIA and its impact on the AI trade, let's bring in Lux Capital co-founder and managing partner Josh Wolf. Josh, it's great to have you back on the show on a day where we are seeing NVIDIA, sort of the main player when you talk about so-called picks and shovels of generative AI. You're seeing them report earnings that are up 769% for income year over year for the quarter. It speaks to how quickly and how aggressively AI applications, or I guess the ability for infrastructure for applications, is being adopted. Walk me through it.
Well, you know, it's interesting. It was probably 8 years ago, I got a preview of NVIDIA becoming the soul of the new machine. We were investors in a company called Zoox. Amazon would buy these guys. And I was like, what are these guys training these new machines on for autonomous vehicles? And they said these new NVIDIA chips. That was when NVIDIA was a $15 billion market cap. At the time, Intel was a $150 billion market cap. You fast forward to today, over $1.8 trillion, just absolutely incredible. I do feel, though, right now you're seeing a flood of retail investors start to get excited about NVIDIA. They're probably 5 years too late. I always say that you want to be today where you should have been 5 years ago. you have a dynamic where $1.8 trillion market cap against Google, roughly $1.8 trillion market cap, they're generating 60 billion of revenue. Remember, Google is generating 60 billion of cash flow. So I would just say it is real. The infrastructure build out is serious. And it is also a time for caution and not to see this as like some crazy meme stock. This is being, in my sense, overbuilt right now, which will be massively deflationary for many of these AI chips.
Interesting. Okay, so when you say 5 years too late, what, especially as a retail investor, and I know you're focused on the private markets and VC venture capital specifically, but when we talk about 5 years too late, what would be right on time right now?
You know, it's really interesting and almost a little bit contrarian. Everybody is racing to the future right now. And, you know, it's a time when rates have risen for the past 2 years. When rates are rising, it flips the dynamic that we saw for the past 10 years, which is low rates are like a tractor beam for the future. They are pulling far out, fanciful ideas that are maybe 20-year things into these 20-month frenzied projects. Now with rates rising, a lot of entrepreneurs and a lot of venture capitalists, you have to ask the question, have you learned the lesson of the past few years? I know we're in an election year. I know the White House and the Fed want to create a wealth effect, want to fight inflation. These two things are sort of incompatible. I actually think that the contrarian thing to do right now that people are going to realize 5 years hence is not race to the future to fund space elevators and fusion and all kinds of crazy stuff that we ourselves love to fund, but we like to reduce that gap between science fiction and science fact. Right now, we're obsessed with the theme of maintenance. You think about CapEx. There's two parts of CapEx. There's growth, which everybody's been funding, and maintenance, which nobody's funding because nobody wants to think about the trillions of assets that are there right now that should be fixed. That's in defense, that's in biotech, that's in infrastructure, that's in artificial intelligence, specifically for the open source software systems that need to be maintained by the likes of companies like Hugging Face and Together Compute.
Josh, I know.
So his core point is retail is way too late. $800, 1.9 trillion, not justified. Not just because the numbers are not the best, but just because you kind of missed the revolution. And his argument is the revolution is now happening in software startups, which he can be right about that. But do you think he's also right about his take on Nvidia?
So, I mean, I think the way he made it seem from what I'm seeing is if you're looking for these crazy market beaters. If you're looking to like maybe 10x, 100x your money to some extent, obviously you're too late on Nvidia. I do believe in the long term, Nvidia will be a market beater. But I kind of mentioned here that for me, a buying opportunity for Nvidia would be when we kind of see some of these negative cycles. That to me, I'm kind of also saying that at the moment, while I am bullish in Nvidia in the long term, I feel like I think about this with my stocks all the time. I'm bearish in all my stocks, no matter what it is, being Nvidia or anything. I'm usually always bearish in the short term and bullish in the long term. And what I mean by there is anything can happen here in the overall market. We can kind of see bubbles of sometimes maybe overvaluation, where maybe in the next year, sure, Nvidia might take a hit from where it's at right now. So I'm bearish in the short term of it. But in the long term, I do believe that Nvidia will be a much bigger company than it's at right now. So for me, I'm personally not buying. Luckily, I was early, not completely early, but definitely early investor compared to where a lot of people are right now. But I'm not buying right now, right? I'm waiting for that buying opportunity. And in the semiconductor space, either being Nvidia, any other company, we always tend to see some form of correction that we didn't see coming, even though everything looks amazing. And that's when I'm going to wait for me to add on to my position.
Yeah, I think your point here about the bubble is also something that, Dan Ives has been saying in terms of this in 1995, not 1999. And I think this stat right here kind of blew my mind today. Cisco at their peak, everyone likes to compare Nvidia and Cisco, was growing revenues at 60% year over year, PE of 135. That's when they were worth 460 billion back in 2000. Nvidia, 125% year over year, guiding for even, still good growth, 90% next year or this year, PE of 35 and worth 2 trillion. It's different than Cisco. We're in a different time. We have more inflation, but still the numbers are mind blowing. And they're different than what Cisco could have ever even thought of doing. And the opportunity in the context of AI is probably bigger than what Cisco was doing. Does a stat like that also lead you to think that, yeah, there's going to be bubbles, but maybe we're a little bit earlier in this bubble than at the top of the bubble?
I would say maybe not the stat in general, but just obviously we can see it's completely different from, and it's always funny to say that it's completely different. But it just on those numbers, it actually is different from where it was before. And right now, You have AI that can be used in so many things, like automotive. We're talking about autonomous driving. That form of autonomous driving can also be used in robotics, in drones, in aerospace and defense. I mean, once things like this start to go good, I mean, the United States Army is going to be spending big bucks on something like this. So it in the healthcare market, again, in the healthcare market, it's insane. Once we start to see big amount of data coming into this, where eventually, again, I don't believe it will happen in in the next 5 years, or maybe even in the next 2 years. But I do believe AI is going to be the reason a lot of diseases are going to be cured in the future. So again, this Nvidia to me is one of those companies where I personally don't want to sell, because 15, 20 years from now, I don't want to be that guy that was like, oh yeah, I held Nvidia and sold at 800 at $1.8 trillion, but now this is a multi-trillion-dollar company because it
Right.
kind of completely changed the world. So, and I'm pretty sure you could have used that point with Microsoft multiple years ago. You could have used it with all these big players multiple years. When you hit some form of cap, you always fear that, hey, look, you can't go any higher. But historically, we've seen that once there's a cap, that cap can keep being broken.
Yeah, and ChatGPT came out in November 2022, right? It just came out. Most people don't even know what an LLM is, right? It's not like a synonymous phrase like, oh, I'll just Google it. Like, people don't say just ChatGPT it. So there's a lot more room for growth. In the context of taking profits, you don't at all feel an itch to trim a little bit because you're so long-term focused, or do you still feel you should take profits along the way?
I mean, I think it's obviously a different answer for everybody. For me, at the end of the day, the money that I have in my portfolio is literally money that I put in there that I don't need to see in my wallet for the next 10 years. So when I put that in my mindset, I don't want to try to time the market. Because I feel timing the market always fails for me. I might be the worst trader. I feel like I've done it before. I was actually a very early investor of AMD. AMD, I actually bought in at like $5 and I sold it at 12. Luckily, I got back in like in the 20s, so I'm still pretty good. But I'm like, what if I would have kept it at those 12s? And it's like, to me, I've seen that if I usually have a gut feeling, I'm not always right, but my gut feeling tends to have a higher probability from my past history. So for me, I don't want to time the market with Nvidia. Sure, maybe in the short term I might feel some pain, but I believe in the long term, future me will be pretty happy.
Yeah, because I think in the long term, which is what Jensen keeps trying to say, this is not slowing down. And he's so confident when he says it, you know? He's just like he's just like, I know you're I think in his head, he's thinking like, I know you're an analyst and you're trying to figure out some price target, but you don't even understand how big this is going to be. So if you just listen to me, like actually listen, not worry about the stock, maybe you'll understand how big this is going to get. China. So the US said you can't sell to China. And then for some reason now they're able to sell to China. Can you speak to what's going on with China and how that impacted their earnings?
Yeah, so China used to be 25% of this company's total revenue when you look at the data center market. And back in October, we got hit with export control due to national security defense, and rightfully so, I believe. But unfortunately, this quarter, the Chinese market dropped to single digits. So I think that's insane. First, just think about that. That a sector that used to be 25% of this company's total revenue dropped to 1% because it pretty much was eliminated, but yet the company was still able to beat guidance and see revenue growth. Imagine if that market was still there.
No.
So they mentioned that, hey, look, this quarter they worked with the United States government. Unfortunately, for quarter one, they still need to kind of test out these new chips that they made, and they got the okay from the United States government. So they're
And
sending
real
it.
quick, these new chips are going to be like less powerful than what the US wants them to send, basically. That's the difference.
Yeah, that's pretty much it. You want it to be less powerful, and you want it that it's less powerful because of the actual hardware. Because I do believe before they might have made some small tweaks that could have been like hacked and kind of gone back to being their true form to some extent. Where now these chips are like un, a whole complete chip where they're a lot weaker. So in theory, China can't use it against us. Um,
Hmm.
and these new chips, so they mentioned they're sampling it out to customers, but for quarter one, it seems like it's still going to be a single digit revenue. And again, let me just recall that a sector that was 25% next quarter is going to be single digits, yet the company was still able to beat guidance expectations from analysts. Imagine if that market was still there, how much they would have beaten. One question though that some people might be asking it, and follow through. I do believe quarter two, quarter three, we're going to start to see a pickup in revenue, and that's going to be a nice tailwind for the data center revenue in the future. But one question that I do believe a lot of people have is, right now we're supply constrained. If we're supply constrained, if we start to send chips to China, isn't that just going to like reduce the chips somewhere else?
Right.
And the answer is not necessarily, because these chips are weaker in China. They don't need that advanced packaging that we talked about a few episodes ago. So in theory, if they get that China okay, since they're not part of that advanced packaging, they can still see a boost in revenue while still be able to send those supply constraint chips somewhere else. So it'll be a nice tailwind for the company, opposed to just shifting the demand somewhere else.
Wait, so you're saying if the chips aren't as good, then it's a different type of chip that they're going to be supply constrained on, which will kind of solve the problem.
Yeah, so right now, NVIDIA sells the H100, and the H100 has it needs this special process to be made. And that special process is what's supply constraint at the moment. And so many people think that the chips that go to China also need that special process, but they
Right.
don't need that process. They can, so that special process is what's being supply constraint. But the China chip, not all their chips need that special process, so they don't get that supply constraint issues for the China chip. So in theory, they can ship as many chips as they want to China. So that can be a nice boost in revenue growth there.
Oh, that makes a lot of sense. I did not know that. So, that blew my mind, dude. China was 25% of their revenues. That's kind of like Tesla. 25% of their sales are in China. And if that went to zero, I mean, Tesla stock would be in a tough situation. That went to basically 1% for Nvidia because of geopolitical concerns, nothing to do with interest rates or anything like that. And they adapted to the point where they were growing so much, they still beat on every number, and they beat pretty handily. I mean, that's just, it starts to give you a realization for why the market is actually so excited and continuing to buy the stock. All right. Anything else on earnings that stood out to you? We talked about automotive revenue. We talked about data center. We talked about China supply constraints. Anything else that was kind of continuing to give you your thesis as a long-term shareholder?
Let me just share my screen. I have this presentation that I did a video on earlier. Let's see.
Cameron says we've mentioned chips so much that now he wants Doritos.
So we talked about supply constraint. Oh, a few things. The company did mention that while supply is improving for their H100, they do expect that their next generation chips that they're going to come out later on, which is going to be the B100, is going to be supply constraint. So we're still going to be in a supply constraint. In theory, that's good news. It means that there's more demand than there is supply. So we kind of saw that. The other thing I want to see, what else did I kind of talk about here? Margins. Margins was something interesting. They did mention that margins this quarter jumped to like 77% on non-GAAP basis. And they did mention that quarter one is also going to see high 70s. But they do expect the rest of the years to drop down to mid 70s. So it does seem like we did hit a peak in gross margins, and we're going to start to see a stabilization in gross margins for the rest of the year, but it's still going to be in the mid 70%. We talked about China. The other thing that I thought was pretty crazy, and I think this is the last one, we talked about their software as a revenue growing to a $1 billion run rate. Within this $1 billion run rate, they kind of, to some extent, have created this software that's so good with their GPUs that they actually license this software per GPU basis. So they mentioned that they charge roughly $4,500 per GPU per year for this kind of software solution. So, I mean, this could be a huge growth driver if you continue to see more GPUs. I mean, there's certain people that are using thousands and thousands of GPUs. So imagine paying $4,500. Obviously, there might be some pricing discount if you have many GPUs, but I do believe this is a great GPU as a service type of deal, or a software as a service, but more of a GPU where you're charging $4,500 per GPU per year to kind of have this software solution and continue to optimize it. So I think that's going to continue to be a nice growth for their software market, which tends to have high margins. So this is one that I was really excited about.
Okay, awesome. Let's move on to Q&A. So any questions in the chat, let us know, and we will get to them. It could be about NVIDIA, semis, anything. So let's do this one. Let's do a quick one. Stock split. A bunch of people are asking about the stock split. I think if they really wanted to make things crazy, split that sucker 10 times, make it 80 bucks a share. Do you know, I just feel like a lot of people will be like, 80 bucks? You know, most people don't care about market cap. They don't know the market. It's 80 bucks. I think the option chains would explode because now you could gamble that Nvidia is going to get to 125 versus like 1,035, which just seems more realistic to people psychologically.
Mm-hmm.
Do you think that would be a good thing to do, or do you think, and do you think they're going to do it?
I mean, I think it'll be. I mean, obviously, as a long-term investor, I could care less.
Yeah.
But it definitely, like you mentioned, it definitely has that psychological change on people where, oh, it's crazy. I'm not really buying Nvidia for $400 or $800 right now. I don't mind paying $80 for it. So I do believe there's that psychological change. The other thing that it does help out with like the international regions. I know international investors sometimes don't have fractional trading. So it can open up the market to Nvidia to a lot more people, increase volume. But with the increased volume, we also might see increased volatility to some extent. So obviously, it could definitely, we've seen great news of stock splits before, but as a long-term investor, nothing too worried about. But at these prices, I wouldn't put it out the table. I would say if we continue to go higher, we might see a stock split in the future.
Yeah, I agree. I mean, like, I think a stock split would be cool and it would be fun. But like, it will create a lot more volatility in the stock. And I think what they want to protect the stock from is a lot of retail speculation and speculation in general. And like, look, they're a big company, third largest company in the world. There's going to be speculators, but if you kind of encourage it by making it not cheaper, but like more attractive to buy, maybe that for long-term shareholders isn't the best until the stock gets to a point where it's like, all right, no one wants to pay $1,500 a share, and then it gets there. Next question from Al Money. He says, how many investments will AMD need to make on ROCM to catch up? They should rock them. They should be in a good place for they should be in a good place from the hardware, if not for the driver support, looking to see if they are worth owning. What is Rock'em? Because I don't know what that is.
So, I mean, NVIDIA has their H100 chip, right? And to kind of increase the optimization and create and increase like the software solutions, they created this software called CUDA. And CUDA, I believe, is a multi-decade investment
Right.
that has really shifted their GPUs and make them, the software gives their hardware a purpose. And AMD is the biggest competitor, and they have their hardware chip, the MI300. And for the past year or so, or 2 years, they probably said a lot longer, but we really haven't heard Rock'em until this past year. Rock'em is kind of their version of CUDA, which is their software solution. I mean, it's definitely going in the right direction. They're going more on the open source route, which is definitely helping out as people want to help out AMD. So there's some form of competition in this market and some form of checks and balance. But at the moment, if you're really looking at AI chips, I think NVIDIA is the big winner here. AMD can definitely grab crumbs from NVIDIA, and even crumbs can be a big deal for AMD. But I do believe, and let me just say this, AMD is my second biggest position, so it's not like I have too much hate for AMD. AMD right now, in my opinion, is a little bit too overvalued when we look at
It went up
forward
10% on Nvidia's earnings.
Yeah.
Well, not even their earnings.
Yeah, it's just because investors are getting excited that they can get some crumbs or maybe at least half the loaf of what Nvidia is getting. And it's definitely possible, but I think Lisa Su is being a little bit too conservative with the numbers, and I'm a little bit worried of why she's being this conservative. Is there something that we don't know? Why can't she just pump those numbers up a little bit and tell us what the real market is for AMD's MI300?
Yeah, because their guidance we looked at on this channel, on this podcast, it was not the best for Q1, and so I was very perplexed seeing Nvidia. I mean, I obviously I thought the semiconductor market would do well after Nvidia earnings, but 10% for a company like Nvidia, it's $20 billion in market cap. That's not easy to do.
Yeah,
So,
I mean, AMD for GPUs, which is like the H100 for NVIDIA, AMD only believes that for 2024, they will have at least 3.5 billion. I mean, we just saw NVIDIA did over 20 billion just this quarter alone. And you're telling me AMD, you can only do 3.5 in the full year.
right.
So again, she's being conservative for a reason, but I just don't like that conservatism at the moment.
Okay. Aditya says, do you see Nvidia using Intel as a fab for their products going ahead, given that TSMC is not able to meet the supply currently?
Oh, for sure. I mean, one thing's that maybe not for your typical wafer, which is your front end manufacturing process, but that special manufacturing process that we keep talking about, that advanced packaging, Intel has some really strong solutions with that. So I could see in the future, maybe not for your main products, but some for your weaker products, maybe for your Chinese products, maybe for your cheaper products. I could see them going to Intel to kind of help out increase their supply chain efficiency.
Okay. Mr. Seymour Duck says thoughts on ARM and Samsung to co-develop two NVDA optimized Cortex cores.
Cortex cores, yeah.
Well,
So I
what
mean,
what is he even asking? Because I don't even know what that question means.
so right now, the way chips are made, when we're kind of hitting right now, chips are being made. I think the most advanced chip is 3 nanometer. In the upcoming year, we're going to see that 2nm, which is going to be that 2 nanometer chip. In this 2 nanometer process, we're changing the way chips are being made into this new process called GAA, which is going to be gate all around. This new process is going to completely shift the way we think semiconductors are built. So there's a lot of changes happening right now. Samsung is a big player that's trying to do this. Intel's a big player that's trying to do this. TSMC is trying to do this. It seems like ARM has partnered up with Samsung to kind of optimize their own solutions. I pretty much don't follow them too much, but I mean, ARM is making smart decisions. I saw them just partner up with Intel. Obviously, they have partnerships with TSMC in general. So I don't think it's anything revolutionary for for ARM. It might be revolutionary for Samsung, as Samsung needs to get more customers in their foundry line. But I don't think most people own Samsung because it's traded. You can't really trade it here in the United States.
The 2 nanometers versus 3, if it's smaller, is that better because it makes the devices there the chips are in better, or why does it need to be smaller?
Yeah, in theory, yes. When you start to get smaller, think of it as roads, right? If you have a smaller city, you're able to get to one point to another faster. So think that's one thing that with forms of energy, with forms of data, when you have a smaller chip, the transfer rate that happens seems in theory should be faster. And since it's smaller, you probably use less power as well. But as you get smaller, you start to get into a lot of kind of chemical and form of just molecular issues. And that's where we're kind of changing from whatever we had to gate all around to that GAA, because there's some form of kind of like, I don't know if it's defects, but some form of weakness that starts to happen as you get smaller and smaller, that you need to find something else to do it, another way to go about it.
Right. Cameron says, what are your guys' favorite semi ETF? This is an interesting question. So, Jose, I don't know if you know about this ETF, but it's SMH, and it has Nvidia, TSM, Broadcom, all these guys. This thing alone, year to date, is up 20%. And 20% on an ETF is incredible, because even if it's a concentrated sector-specific ETF, you're taking way less risk than betting on the ASML or AMD or Nvidia. You get to just buy this thing. And for this thing to do 20% in 2 months is just incredible. Are you a fan of sector-specific ETFs, or would you just buy all those stocks and kind of make your own ETF of semis if you're interested in them?
The way I go about it in my investment portfolio, I like to invest in the high growers, and that's why AMD and Nvidia are my big players. I do believe, and we've seen if you have time, people can look at it. The overall SMH and the overall semiconductor ETF has outperformed both the S&P 500 and the QQ and the Qs, not just this year. For the past 10 to 15 years, the semiconductor ETF is way better than the overall market. So for me, I know a lot of people like to invest in have that basket. My basket approach is I invest originally in the high growers, but then I do invest in SMH. So SMH is one of my favorite semiconductor ETFs that I hold, and I tend to buy this over. Let's say if I believe my Nvidia is too expensive, if I believe my AMD is too expensive, and I want to put money into the market, I don't put it into the S&P 500. I put it into the SMH, because in the long term, we have seen that the SMH, the semiconductor market, continues to outperform the overall space.
So when I said, Jose, I don't know if you know this one, inside you were laughing internally. I was like, he definitely knows this. I don't know why I'm saying that. But so you don't buy the SPY, you buy the set, because you're basically like 493 of these companies are trash. There's only 7 that matter. And out of the 7 that matter, there's only one that's really leading the revolution, right?
Yeah.
And so you just buy the SMH. Wow.
Yeah. So, I mean, obviously, I have a few accounts. I have one account which is my personal, and one where it's like my wife and I. And with my wife, we talk about things. And the one with my wife, she prefers the S&P 500. So I'm like, okay. I mean, at the end of the day, it's still money growing. But for mine, it's the SMH opposed to the S&P 500.
Okay. So I've got some money in my Roth. Obviously, this is not financial advice or anything, but you think if I was trying to be more conservative in my Roth and like have that money grow over time, SMH is a bit more of a it's a grower, not a shower type of thing.
Definitely.
versus-
And it's going to be a nice grower. It's going to be, I believe if you don't know the semiconductor market, and you're worried about the crazy valuations that you're seeing with these big players, the best way to play the best way to play any form of innovation in the future is the semiconductor market. I mean, right now we're thinking about it in the AI space, but let's say autonomous driving, let's
or
say some form of
robotics.
robotics, yeah, anything, healthcare. It's all going to be led by some form of hardware solution, and that hardware solution is going to be developed. Excuse me, it's going to be developed by a semiconductor player.
No, I think you're so right on this, dude, because obviously I do not know, like, I didn't even know what NM standard for, nanometer, right? Like, I am not well versed on the semiconductor market, and hopefully this podcast gets me to be more well versed. I get to do my own research, but for me to legitimately say, yeah, I'm going to buy ASML or Nvidia or Broadcom, I'm like, I don't know what the hell I'm doing. I'm just buying them because they're fun names, but like, I don't really understand those theses. I think SMH in the Roth actually is a decent idea because I get exposure. Maybe I don't get 20% every year, but if semis keep mattering, and with all the different verticals you're talking about, I think they're going to keep mattering. That ETF has me covered.
Yep. And eventually, I mean, if you start to think about things like quantum computing or just the next generation of space exploration, even if we don't see that in the next 10 years, it's eventually going to happen, and it's going to be powered by some form of semiconductor device.
Right. Okay, last question, and then we'll end it out. Thank you, everybody, for joining. 177 people. Real quick before I read the question, please make sure to follow Jose on Twitter and YouTube. He's got a very successful YouTube channel that a lot of people in the world care about his thoughts and opinions in the semi space. And his Twitter account, just put it in the chat. Please make sure to follow him there.
Thank you.
Question is, why are chip makers so far behind TSMC? Basically, why are these guys a pseudo monopoly?
Yeah. So at the end of the day, making these advanced chips, like we were just talking about, like 2 nanometers, you need to invest billions and billions of dollars for the equipment. I mean, ASML, they just released their new equipment, and just one equipment sells for over $350 million. That's their most updated one of their equipment. So it's a very intensive capital market. So TSMC, luckily has a lot of subsidies all around the world that they've been able to kind of stay in this space. They've also have great partnerships with a lot of the semiconductor companies that help them continue to develop. But we are kind of seeing traction in the United States and all over the world where, unfortunately, TSMC, because of the cost of labor, most of their fab plants are in Taiwan. The world doesn't want that anymore. COVID happened, and everybody realized that, hey, look, chips matter a lot. And the only place that they're coming out of right now is Taiwan. So we need to fix this. And you're seeing subsidies happening all over the world, from Europe to here, the United States. And now you're seeing companies like Intel, like Samsung continue to grow. And I do believe in the future, we might see a world where Intel and Samsung might be a little bit of a stronger competitor to TSMC. But I think at the end of the day, it's just been such an expensive market that no one wanted to follow suit, because it was heavy research and development. So they just let TSMC go wild.
And that's why, we've been talking about Sam trying to raise $7 trillion. It's like, it is such a high barrier to entry to actually create this end to end. I mean, it took Nvidia 30 years, right, to really get to this moment. So it's not going to be easy for a lot of people to compete here.
Yeah, definitely.
All right. That is awesome. Thank you, everybody, for being here. This was great. Episode 4 of Chip Chat. We'll be back next week, and we'll see what happens in the broader semiconductor chips space. Thank you, everybody, for being here. Jose's YouTube and Twitter, follow it in the description, and we'll see you guys next week. Enjoy your weekend, and that's it. Thank you, everybody.
Thank you.
Have a good one, and congrats to NVIDIA shareholders, because it was a good week. Bye, everybody. Have a good one.